Hey guys, welcome back to The Poor Investor. Today we're going to be going over some financial advice. And of course, this is not financial advice, but it's just my recommendations and how I would invest for my future to grow my future wealth on a tight budget. So it's very important that no matter what it is or who you are, no matter how much you make, whether you're working part-time or making a minimum wage, everyone has to contribute to their future wealth, because you don't want to be that person by the time you get a little older and you're like, what the hell did I do with all my money? Did I really spend all my money on buying GPUs to mine Casper? Or did I really buy all this hard drives and it didn't get me anything? Well, this is what I'm here to help with. The important thing is that this is just a recommendation. I'm going to throw out some tips, and whether you follow it or not, that's all up to you. You have to do your own research, and if you don't feel comfortable doing any of this on your own, consult a professional. Now, I'm not your professional. I'm just a guy on YouTube that's going to be going over a few things that I've been doing that help me decide on how I wanted to grow my wealth. And I chose to do all the tips that I'm going to recommend here because it really does work. It's just really logical, actually. So let's go with tip number one is start with a budget. Creating and sticking to a budget is the foundation of all financial success, which is very, very true. Analyze your income and expenses. Now, one thing you want to do is live below your means. Like, don't spend more than you actually make. So if you make $1,000 every 2 weeks, don't go spending $1,500 on a new watch or a belt or throwing a lump sum into something you can't buy or afford. And even though you can afford it, do you really need it? So creating a budget is really important because you're going to need those funds to put into something that's going to compound and grow towards the future. So that's tip number one. Tip number two is setting up that automatic contribution, meaning whatever it is that you make, automatically you can set it up and have it thrown into a ETF or some kind of stock. Just let it compound. One thing you want to do is, after you manage your expenses and how much you actually have left, you have to pay rent and you have to eat and buy food and pay for heat and electricity and all that other good stuff, minus the GPU. You don't need GPUs, all right? The heating and GPUs and mining crypto is not a source of heat. Or is it? Actually, it may be. So maybe I'll let that one slide. But anyway, tip number two, automatic contribution. Very important. Don't over contribute, because if you do, then you're losing out on money that you may need for the month to pay rent or your car payments or gas or small emergencies. All right, but the automatic payment is very crucial, because that money, as soon as it hits your bank account, is automatically transferred or directed over somewhere else where you can't have the ability to take out that cash from the checking or deposit or whatever it is, and then you spend it, right? And then you go, oh, I don't have enough money this month, let me just wait a little longer to my next pay. You don't want to do that. You want to constantly be on schedule on paying yourself. It's basically the contribution is like paying yourself, because it's your money. It's not like you're spending the contribution money. It's going to yourself, your future self, which is really, really important. So tip number three is embrace low-cost index funds instead of trying to pick individual stocks, which I'm not a professional in, but I do buy occasionally independent stocks like Target or Tesla. I'm not telling you to buy them. I'm just saying the ones that I would buy. But if you're not into all that good stuff, maybe buy SPY, because that's like the top 500 companies. And it can't go wrong, because in order to be up there in the top 500, they have to be doing well. So the average percentage of the SPY, they are continuously earning around 8 to 10% each year, which is like, it's a no-brainer, right? So you don't have to buying individual stocks and they don't do well, or they fold over, or something really bad happened, but put all your money into that, you would have lost so much. Buying into funds or ETFs help tremendously, because it's like one of the easier routes to take when you do that, right? So you don't actually have to think about which stocks, because it's so diversified already. And these are long-term, not short-term. These are long-term. You invest your money in it. 100 becomes 1,000, 1,000 becomes 10,000, so on and so forth as time keeps accumulating. Okay, so that's tip number three. Tip number four is implement dollar cost averaging. This one is very important, because some people will be like, oh no, it's too expensive this month. Let me wait another day or another week or another month or so, or another 2 months before so the price comes back down. There's no need for any of that. If you're constantly contributing your dollars into all this, just dollar cost averaging, because one week it could be $20, then the following week could be $40, and so on and so forth. Or the third week it could drop back down to $20 or even less. So you're just buying into these stocks or these ETFs or these mutual funds. Your dollar cost averaging, meaning you're buying it high, you're buying it low. Eventually it's going to equal out. As more money you put in, it's going to equal out. So you don't actually have to constantly watch how much it goes up and how much it goes down. Although, because I am a chia farmer, I usually look at the price and I'm like, I'll wait a little longer before I buy, or if I would buy. And if I don't buy because I just think the price is too high, then I'll just wait a little bit. But that's all up to you on how you want to address that. Now, you can say, all right, I'll wait a little longer because you've been following the news, you've been reading it, and you'd be like, oh no, this week is going to be a good week for buying into it because it's going to dip a little. Or unless you're really analyzing the stock and the trends of it, that's great. But if you're not and you're just like, I don't have time for all this, dollar cost averaging, just throw it in and just buy it as soon as you have the money, to just buy it. Okay. Number 5 is explore micro investing apps. There's a lot of bunch of apps on your phone. It's so easily accessible and it's just like one click away. You got all these different platforms. Robinhood is one of the ones that I actually use, which is pretty straightforward. I know a lot of people are not too fond of it, but I haven't had any experience with any other apps, but I've used Robinhood. But ultimately, I'm not too crazy doing everything on my phone, so I log into the web. I use Charles Schwab, which was TD Ameritrade prior to that. They actually got bought over by Charles Schwab. That's at your own discretion. That doesn't affect how you invest your money, whatever platform you choose to invest your money with. The phone itself has a lot of different apps that you can do, and they're pretty, I guess, user-friendly now. You just click. But I like more details, me personally. Tip number 6 is educate yourself and do the research. Investing requires knowledge and understanding. No kidding, right? And take advantage of free educational resources, read books, and stay informed about the basics of investing. Very important. I have books on investing as well. I love reading about Warren Buffett, Charlie Munger, the whole Berkshire Hathaway. And of course, there's a lot of other investors you can follow that are on YouTube, actually. But some of them are, you have to be really careful though. Some of them are really, like aggressive. They got these ninja traders and these penny stock traders, which is like, we could make you millions of dollars overnight. And I'm like, oh my goodness, is that really true? And people fall for it because all they really do is sell a program, right? Those are not long-term investors. Those are like up to the second. You really know, you have to know what the hell it is that they're doing. I tried studying that and that didn't work out for me. All right. This whole buying options and oh my God, I can't do it. I can't. It's too aggressive and it's too stressful. All right. Let's just put it that way. We're trying to build financial wealth, not lose my pants while we're trying to build it. Right. It's just very dangerous. Long-term stocks, stocks that may be paying dividends, or companies that that would be lasting for a really long time. Obviously those are all things that you have to take in consideration. You have to read up on them. You could read up on the owners of the company, what's their situation, how much they're making, what their financial stance are. Right now, the stocks on AI is really hot. Nvidia, AMD, Microsoft, all these different stocks that are related to AI is on like a bubble right now. Whether it's gonna be able to maintain that or not, it's all up to how much research you do and how much you believe in the company and the direction that they're taking the organization, right? So that's really crucial, is that you have to do your homework on all this. This is just a tip. This is just me saying that, you need to do your educational research on it as well in order to see if it's worth investing in. So that's really crucial. Tip number 7, be patient and stay committed. There are going to be times when the stock market, for whatever strange reason that you are unaware of, is going to dip, right? You're going to lose maybe 5%, 10%, 20% sometimes. But if it's that drastic, yeah, there's something going on. Maybe there's a war, maybe there's another pandemic. But ultimately, you can't be that fearful. You have to stay calm, right? It's a long term. So whatever it is that you have, and don't panic sell. That's one thing, is you don't panic sell. You have to stay on track, and if you are focused on all this, let it be. You know, just breathe, right? Just breathe it out and say, okay, it's gonna be okay. I'm not gonna lose everything. But unless you're investing in companies that are like no one ever heard of, or companies that are like just so like not on the market that can be analyzed, these penny stocks, you know, you just have to be really careful. And again, it goes back to the previous tip, number 6, is where you do your educational research. Apple, Target, and all these other big companies are not going to fold overnight. They're not going to fold within a week. It may be possible, but you have to look at their financial stance. You have to look at their financial and see how stable they are. I'm not saying that you actually have to be so technical and you have to be like analyzing every number that's on the chart, but news, right? Just some articles. Do a quick search on Target stock, or you know, Apple stocks or Amazon stocks, and just see where they are. Are they growing? Are they in a lot of debt? That's probably my take on tip number 7. Be patient and stay committed. Don't freak out. Just don't freak out. Remember, investing is about building wealth over time. No matter how small your budget is, just by implementing these tips, you can take significant steps towards securing your financial future. And of course, here I am, the poor investor. You will not find more than maybe $1,000 in my bank account at any given time, because all my money that I make goes straight into my investments account, whether it's investing in stocks or real estate. That's where it all goes, guys. So I thank you guys for being here, and hope you guys enjoy this video, because, you know, I am the poor investor. Happy investing. Make sure you like, comment, and subscribe, because I'm just going to enjoy doing videos. And I'm still going to be talking about chia. Don't get me wrong, guys. I'm still going to be talking about chia. But, you know, recently the chia community on Twitter has thrown me for a loop. And I'll discuss that in the next video. But these are my tips for building your financial future. All right, guys? I want to thank you again, and I'll see you guys again soon. Bye.